Hey, what's going on, guys? Welcome back to my channel. This is Blood Phantom 81 in a V-neck. In this video, I'm going to be fulfilling a subscriber request. So this one comes from Manny. Basically, what he wants to see is more technical analysis or trades that I'm making or planning on making. Also, possibly going over some basic TA stuff for newbies. And so this video is actually going to incorporate a little bit of everything. There will be a technical analysis course coming out later this year, so stay tuned for that. But this is going to be a more simplified version of some setups that I look at and basically what I look at in general when I want to make trades based on technical analysis. So Manny, if you're watching this video, thank you for the request. And yeah, let's just jump right into it. All right, so first and foremost, before I look at anything, I always look at what the broad markets are doing because it usually has a pretty big correlation with how smaller stocks are doing. Not just smaller stocks, but I just mean like constituents of the NASDAQ or constituents of the S&P 500. Everything generally tends to be correlated, especially if it's large enough and especially if it's in the right sector. So for example, stocks like Microsoft and Netflix and Apple are going to have a pretty large correlation with how the NASDAQ is doing. If I'm looking at industrial stocks, for example, I may look at the industrial index or I just may look at an index like the Dow Jones, for example. If I want to get a broader sense of how stocks are doing, I'll look at the S&P 500. And so that's basically how I start off my analysis generally. So, let's look at the NASDAQ. Obviously, we had an awesome day today. I think the NASDAQ was up over 2%. Pretty strong case for a bottom in place. And so what we're going to take a look at is some stocks that have taken a beating relative to the NASDAQ. And then we're going to take a look at some setups going from there. All right, and so the first stock I want to take a look at is Google. And so obviously Google is in a long-term uptrend. It's probably always going to be in an uptrend in my lifetime at least. And so actually when I saw this setup, I texted my girlfriend. I was like, hey, you should buy Google because that's what a good boyfriend does. And so yeah, so Google is obviously, so this is a weekly time frame, obviously above the 200-week moving average, and it is currently retesting the 50-week moving average. You might be thinking, well, why is the 50-week moving average significant? And that's because it's actually the 200-day moving average, more or less. And so this is definitely a significant area. I only zoomed out so you guys can see the bigger picture, but essentially we are retesting the 200-day moving average. And this is different from most tech stocks, right? Because Google actually took more of a hit relative to other stocks with regards to their long-term moving averages. For example, Netflix did not get close to its 200-day moving average. Now, on one hand, this could be seen as a good buying opportunity. On the other hand, it could be seen as weakness relative to other stocks. As I showed with Netflix, it's not as close to its 200-day moving average as Google. But really, I don't really think about it as relative strength or relative weakness. It's just more about the setups in place. Obviously, the uptrend isn't as ferocious as other tech stocks, for example, but it's still a really good buying opportunity. You definitely want to be buying closer to here than you do up here or up here or up here, right? You want to be buying closer to here, 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 etc. And so, pretty obvious setup, if I say so myself. And so Google actually plays a significant role in the NASDAQ. The next stock takes a smaller role in the NASDAQ, but it's still pretty highly correlated with how the NASDAQ is performing. And so that is Visa. And so the reason why I'm looking at Visa right now is also for the same reason, retesting the 200-day moving average. Now, Visa actually has more qualities compared to like the S&P 500, for example, in that relative to the February high, we did not make a significantly higher high. In fact, we got rejected pretty much at all-time highs, which is kind of what the S&P 500 and Dow Jones look like. So in that sense, it looks more like those indices than the NASDAQ. But still, this kind of pattern, right, which is, obviously we have a really violent correction and a race to all-time highs and then get rejected here, finding support somewhere halfway. I mean, this is a pretty common pattern that you want to see. I don't like to give patterns names, but this looks like a cup and handle. So back in June and July, Visa was consolidating within this range. We eventually broke out of it and then retested the bottom of the range and then just had a pretty explosive move. But now it's giving us a second chance for those of us that didn't get an opportunity to take advantage of this move. And yeah, it's pretty much exactly where we were back in May and June. And the last stock on the list. So notice how I went from Google and Visa to now Livongo. So each of these stocks are in order of least correlated with the NASDAQ, for example. And so Livongo is actually the least correlated with the NASDAQ versus something like Google. And so we can use that to our advantage basically because we don't have to worry about whether the NASDAQ is going to, go on a correction or not. right? Because Livongo moves in its own way. For example, I think Livongo had something like a minus 20% or close, close to something like that. Actually, yeah, it's probably like a 23% correction back in early August. And this was actually around the time that they merged with Teladoc, ticker symbol TDOC. And so obviously after that correction, Livongo is now entering this trading range. And so in my opinion, Livongo is going to break out. So I'm not going to do a deep dive into what Livongo actually is, but the summary is that they're in healthcare, and specifically they're digitizing healthcare and looking at monitoring health versus actually treating health. So basically, using everything that's at our disposal right now, like smartphones, in order to monitor our health so that we can take actions before something bad happens, right? So it's monitoring versus treatment. And obviously with everything being remote, then this is more important than ever. And so Livongo, I personally think has upside, to basically double or triple itself over the coming years. So I'm very bullish from a fundamental perspective. And the reason why I'm showing it now is because we were in this trading range and it looks like we're retesting the top of the range. And so I think it's a matter of time until we actually break out to the upside. And so, yeah, I mean, when you look at something like Livongo, right, IPO'd back here in 2019, and so pretty much went nowhere for maybe about 2 years. I should say, no, maybe like a year. And then ever since the March crash, which is basically when the pandemic happened, Livongo just went on an absolute tear. And so normally I would look at a stock like this and just be like, wow, this is kind of like a parabolic move. Like, I don't think I want to get into this. I think I'll just wait on the sidelines. But I genuinely think Livongo has more upside to go. If not, we can always just set a stop loss wherever we want, right? So if you're buying shares, that may not be that much of an issue. But if you are buying options on it, then the stop loss is probably more important. But yeah, Livongo is something that I am buying right now. So yeah, let me know what you guys think of this video. That's basically like a pretty simple way to look at how I look at stocks. Not that I'm like an expert or anything. It's just like a look inside my process. If you guys have any questions, let me know, and I'll see you guys in the next video.